Viagra for your brain. It's the Thom Hartmann Show. Dr. Ravi Batra with us. RaviBatra.com, his website. He's the author of The New Golden Age, The Coming Revolution Against Political Corruption and Economic Chaos, and Greenspan's Fraud, among other books, and professor of economics at SMU. Ravi, before we take calls, and we've got the board is totally slammed with calls for you, but before we do that, if you could just unravel some of this stuff for us. The role of the carry trade in that is people basically speculating in currency, moving currencies around, borrowing and then getting interest in currencies. Number one. Number two, the idea that there is perhaps as many as $540 trillion in derivatives still out there. Webofdebt.com has all the information on that. I mean, that's according to the Bank of International Settlements.
Did you say 540 trillion?
Pardon?
Did you say 540 trillion?
That's right. Yeah, 540 trillion.
My.
A half a quadrillion.
Of the derivatives, eh?
Yes, and consider the GDP of the entire planet is 62 trillion. And then, on top of this, the fact that Henry Paulson yesterday has announced that he is not going to do what Congress said he had to do. All along, they've done none of the oversight. He hasn't even populated the board that's supposed to provide oversight for how he's passing out money, but he's already passed out $300 billion, and the Fed has already passed out $2 trillion, and they're refusing to tell us where that money went. And but in any case, as a consequence of his saying that he's going to change horses, he's going to start putting that money in other places. Now, the London Interbank offering rate, LIBOR, this is from today's Financial Times. The key benchmark lending rate between banks rose yesterday, ending a 23-day decline as traders reacted to the U.S. government's decision to abandon its plan to buy toxic assets. 3-month dollar LIBOR edged up 2 basis points yesterday, and was set to continue its ascent today. So, what do you think of all this? What does all this mean?
Well, see, first of all, your question was about the rise of the dollar right now.
Yeah.
What has been going on in the past, in 2007 and 2008, early part of this year, Goldman Sachs especially, what they would do, they would come out with a forecast. They would say, okay, oil is going to hit $100 a barrel. Say it's 70, they would say oil is going to hit $100 a barrel over the next 3 to 6 months.
Right.
Then, after they make the forecast, they borrow a lot of money from banks and start buying the oil contracts. In other words, they start speculating in oil. Now that they have created market psychology, they start speculating in oil, and so the oil price starts going up as they do that.
Right. Plus, everybody sees somebody's buying a lot of oil. I better get in on this.
Exactly. So this way, oil starts going up. Then they also discovered that somehow whenever the euro went up, oil also went up with it. So now, in addition to buying oil, they started to buy up euro also. Why not raise the price of oil? And then they also found that as euro goes up, gold also rises. So they were buying all these things simultaneously with borrowed money.
Yeah.
And then, the things started to unravel. The U.S. economy is not responding. People are worried, and the recession fears are there. So then oil started to fall. And now you are in a panic mode.
Right.
So as oil fell, they started to sell oil contracts. They started to unload euros, started to unload gold. So everything has fallen sharply. So that's why the dollar has made a comeback. That's the main reason, and the carry trade is another reason. But the interesting part is that our government is now giving money to Goldman Sachs to bail it out. This is crazy.
So are you suggesting that Goldman Sachs was the major or one of the major speculators in oil that drove up the price of oil? I mean, the current chairman of the Fed, Paulson, was the former CEO of Goldman Sachs. Robert Rubin, who was the chairman of, not chairman of the Fed, chairman of the Treasury Department. The chairman of the Treasury Department under the Clinton administration, Robert Rubin, was a former CEO of Goldman Sachs. The guy in charge of passing out the money, the $700 billion right now, is a 35-year-old employee of Goldman Sachs. Are you suggesting that Goldman Sachs is the spider at the center of this?
Goldman Sachs is the ringleader. They would make these forecasts, and then their actions would bring about a self-fulfilling prophecy. And so that's why oil jumped to $147 per barrel in July, and then that's exactly the reason why it has collapsed, because of all that speculation that they did. But they not only speculated in oil, they also speculated in the euro, in gold, etc. All three of them went up sharply. Now all three have fallen sharply as a result.
Right. So are they going to go back up? Are they going to stay the same? I mean,
I think oil may have one more chance to make a comeback, even though the economists don't predict that right now. Next year it could happen. Not because, I think Middle East might explode next year. That's from my other cycles that I've explored. From the social cycle tells me that the Middle East could explode next year and then could drive oil back.
Yeah. It seems like just rough times and rough times. So a good time, I guess, basically to be in cash, I suppose, or maybe in Swiss francs. Dr. Ravi Batra, we'll take your calls we'll take calls for you, Dr. Batra, right after the break here. Dr. Ravi Batra with us. RaviBatra.com is his website. His books, you have to have these books: The New Golden Age and Greenspan's Fraud. Stick around. 34 minutes past the hour, the Thom Hartmann radio program. Well, we don't do suck-up interviews. We have conversations. We're having one right now with Dr. Ravi Batra, the professor of economics at SMU, internationally best-selling author of Greenspan's Fraud and The New Golden Age. And Dr. Batra, ready to take some calls?
Sure.
Okay. Mike in Seattle, Washington, listening on KPTK, Talk 1090. You're on the air with Dr. Ravi Batra.
Hi, how you doing? Hey, I've been listening to Nouriel Roubini, I believe it is, who's been talking a bunch about going into a deflationary period, and I thought I heard Ravi talk about actually going into an inflationary period. Well, anyway, either way, I'm wondering if he can explain to me his theory on what direction we're heading.
Well, I think either scenario is possible right now, but we could have inflation just as well as slight fall in prices. Prices are not going to fall that much, first of all, and so much money they are creating. All these $2 trillion that Ben Bernanke has already put into various companies. They're creating so much money. Supply, I think that has to do inflation at the same time. That will create.
But that shows up a year or so down the road, doesn't it, typically?
Right, exactly. Also, I feel that the dollar is, whether it's going to crash or not, it certainly will fall, and that itself is inflationary. So I think inflation will heat up some, either next year or in 2010. But eventually it will fall sharply when the economy is really bad. But temporarily it could heat up.
Yeah, okay.